FXBros.
Whoa. What's up, people? We back. About to break down these charts, see what we got going on for the week of the 28th on Sunday. We started a little early. Got something I got to take care of later on this evening, so we're going to start a little early. Usually we start at 8. But we're going to get it popping right now. You dig? You dig. All right, so let me go to expand this out. First things first. Since last week, well, no, not last week. Shit, since mid-July. Shout out to Shaylin on her birthday. Sweet buttery sales from around July 14th. So the market been in a sale since then, since mid-July. And as we come to the end of July, about to wrap it up, I will have to look at the weekly and the monthly to kind of get a clearer, maybe an indication on where the market may settle at. Nonetheless, if we look at here, how the market ended with this consolidation, we're starting to see the same scenario kind of falling here. So we might even get consolidation to finish out the year, and then we'll get a breakout on August 1st. So that could be a situation we could be prepping to set up into. We'll just have to monitor that. As far as targets to the downside, of course, we haven't ultimately traded through this 4-hour gap of November 14th, 2023. So if we don't even come back into this area, I feel like potentially the lowest we could come to is about right up under this first leg of bullish structure that we saw coming from these lows in April. This first leg of bullish structure, the low was 64.66. So from that point on up, we've been seeing the bullish trend that we have been seeing throughout the summertime. And since mid-July, all that price action pretty much has been ate up. We still, like I said, we still have targets to go to at that 64.66, and right now we are at 65.56. So roughly about 100 pips away from this low. Something that is possible, very highly possible, highly likely that the market can put that type of move into a weekly candlestick. It's possible. Once we go to the weekly charts, we'll probably have a better indication on how that's going to play out. I do see a little area of interest that the market could reach to here. I'm just going to put it out right now, but I'm not going to keep this up because I don't want to have too much going on. But this area right here. You notice how the market quickly rejected from that. So we could play this area. It could sweep this low, which if it's going to come this low, I feel like it might as well going to take out this little level of liquidity potentially and then shoot high. I mean, why not? You already came down here. You came down here for a reason. Just like up here, when we were trading in this area, we came here for a reason. I was like, well, shit, you might as well tap into this old weekly zone. And not only did it break through that, kind of slightly tap into that 4-hour zone from the 2nd of January this year. Second day of trading this year. So I said it took roughly 6 months. 6-7 months for the market to reach a price level that it hadn't seen since January 2nd. So you got to be patient overall, you know, when you're thinking about even from a level of just trading day to day, week to week, you still got to be patient and wait for these price levels to be met, because the market typically loves to return to uh, a scenario where the market is still showing uh, unevenness, or that gap we see, the gaps that we see. It's not a even correlation between the buyers and the sellers. Like the buyers just expanded out to the upside, and then you have all these gaps. So the sellers have to close that order, if you will, by fully rejecting the bullish side, coming back as a form of retrace into those said gaps and areas of interest before it's taken off. Like I said, in this scenario, especially looking at the 4 hours, but probably even more defined on a weekly and daily. But this took 7 months, roughly 6.5 months. But it came back though. As long as you see structure change, that's when you know when it's time to get in. Like an area here would have been areas to get in. And you would have probably added more here, take profit above here. So that would have been a good scenario, because you're seeing structure being broken. The next scenario, when that happened, this probably could have been a scenario for you, but you would have got stopped out potentially, especially with these strong rejections. But nonetheless, you get the break of structure here. Bam. Not only a nice sweet retest right to the top of that range, and we never saw that. And that was from April 23 on Thursday. So patience plays, a big role in these markets, especially in Australian dollar, because this pair doesn't move that fast, compared to the UJ and all this UJ, GJ, AJ, EJ, all these different Japanese pairs. It tends to move slightly slow. So you have to really have a level of patience with this pair, which is key for us to be trained in really breaking down the charts on the Australian dollar, because we could take that knowledge and that level of patience and go to any chart, any stock, any bond, any commodity, any indice, and really go crazy, because this is damn near out of the major five. This is probably one of the slowest pairs. If not, I don't know if the euro dollar is kind of consistent, being at the interest rates not too far off, but that's what suggests the fact that this market moves so kind of predictable but slow. So let's move up to a higher time frame and see what the daily looks like. Again, you really don't see that gap that we pointed out on the daily. You kind of see a little bit more defined down here, which kind of leads me to believe that we could sell off and take out this first leg of this bullish push that started mid-April, late to mid-April. Like I said, again, that price is 64.65 in that area. I feel like the market could. I mean, we just tanked on the day. So, of course, we got our first bullish day on our Friday, but we were tanking. So, once again, the market came down here for a reason, and I'm going to give it the reason of trying to sweep this first leg of liquidity to continue us higher. Ultimately, we come down here again. If you came down here for a reason, we probably going to be attacking this old daily gap from 2020 that we haven't seen since October 2023. So there's targets everywhere for us to reach to, but we won't even consider these areas until certain structure points, from the previous bullish rally we had, so those levels get taken out. Our first sign, especially on a daily, our first sign of any type of structure wasn't the strongest, was right here. You see how we melted through that. Again, right around these price levels would probably be more defined structure levels, but nonetheless, if you can't really count that, this whole area of resistance would be good enough. And really didn't have no issue breaking through that. As you can see on Wednesday, yeah, Wednesday, the daily just shattered through that, and the next day didn't even retrace up. It just left it. So that's what I'm talking about with the unevenness. Like, we don't have that fight, that consolidation. The bears are heavily, anchored to sell off. So you get these, these levels of where price really doesn't fill in what it previously put out, if you will, especially on the daily. Like, you see these areas, all these different levels of gaps, that we, primarily the ones we want to attack is when you see the gap that is created, but it also took out structure. So these gaps right here would be more ideal because they broke the structure versus trading all the way up here. If the market disrespects this area, then yeah, you can set your expect to probably reach the high of this. But if we settle at here, then now you can probably side with add more sales on and taking it lower. Daily don't really show me nothing. Like I said, we did get this in daily engulfing from Monday, July 15th. The candle really didn't show a body engulfing, but the price did, meaning the open and the close. Hence the fact why we had this arrow. So I'll show you that right there. It's our indicator indicating a bearish engulfing. You see them all over printing bearish engulfing, bearish engulfing, bearish engulfing. So same scenario. Market sold off on the daily. Let's go to the weekly. Weekly engulfing for sure. I don't care if the price or the candle. Now it does have a gap, so it's not showing a true open and close as far as what your eyes can see. But even if I slid this up to be in alignment with the market as far as open and close, we still have an engulfing. It's pretty obvious. Following that engulfing was a very large sell-off, one of the largest sell-offs we had this year, I believe. Yeah, because if I go to a buy, let me see if I got a long position. Take this, and take that. I wish I could move this up. Oh, there we go. So bam, that's our weekly. If I go here, yep, longer than that one. I'll go here, yep, longer than that one. Go here, yep, longer than that one on the bullish side. Yep. So yeah, that's very important. So off the weekly, this was the first week. This is the largest weekly candle. Simple as that. Last week's candle, that bearish candle, the continuation after the bearish engulfing candle, which came from July 15th. That July 22nd week, the largest body weekly candle so far this year. Mental note. We are unsure if we're going to get a bullish one to contest with that, but that is something to keep in mind. And not only, like I said, I mean, we do have some candles that probably have the same price movement as this candle, but this is a full body. And I mean, we do have wicks to the bottom, so that's why I feel like we could have some more selling out to do. I mean, this is a strong bearish move. Basically, within 2 weeks, engulfed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 weeks of trading from May. Getting into May, these last 2 weeks in July engulfed all that. So May, June, and pretty much July has just been a bearish candle now for the month. I would probably, as far as the weekly goes, looking at structure, I would say if we get pricing closing above here as we get into the daily closes, that's when I would look to probably add for buys, and it'd probably be more defined on the 4 hour than the 1 hour. But nonetheless, I'm kind of more hesitant on buys right now. I would need for sure like some engulfings on the daily for buys. And for sure on a 4 hour, which we did have on Thursday last week. Let's see if the 1 hour gave us a bullish engulfing. Yes, it did on Thursday also. So overall, we're for that daily. Do we have a scenario for the daily? No. This could have been one, but it was weak to push up. So in a sense, if you really want to be, real, we probably got more selling, because we would need to print at least 2 or more red candles followed by a bullish engulfing. Let's see, 2 or more red candles followed by a bullish engulfing. That's where you see the bullish engulfing. 2 or more red candles followed by a bullish engulfing. 2 or more red candles followed by a bullish engulfing. So this scenario wouldn't play out. So we would need the market to sell off 2 or more red bearish candles followed by an engulfing, and then we'll get that daily confirmation. Hence the fact of why I think the market could test the low of 64.65. Let's take a quick glance at the month. The monthly is about to embark into a engulfing, a bearish monthly engulfing. As you see this candle close, we have 2 days and 21 hours left for this monthly to close. I highly doubt that in the next 2 days we're gonna run up. 65, 67. 200 plus pips in 2 days. Yeah, not gonna happen. Meaning, or not even that, if it just come up to here, this is no longer an engulfing. I don't think that's gonna happen. I'm not sure on how it's gonna close, but I think if anything, the market is gonna struggle right around here, especially with these closes and opens on the body, quick rejections, closes right here, kind of almost lining up over here way back in 2020. So just little price levels like that I tend to see. So I think again around 65.15, 65.10, I think we'll get some we'll start to see price struggle. But that's if we don't break below 65. 64.65. My nigga.
What's the deal?
Bro, you had not hit me back yesterday, fam.
You told me come to today.
I know, but you ain't tell me nothing. You ain't tell me if you was gonna come or not, like yesterday. So this shit ain't even open, bro. I knew your ass was gonna call me at fucking 2 hours before. Hey, what happened yesterday, nigga? You got tied up?
I got tired smoking that gas.
Man, you care, bro. You don't smoke, dog.
Over 6, I'm going nitro fuel. Fucked up.
Yeah, I see that shit. That's what it's on, man.
It ain't full of shit, though. You must have looked at it full of shit, you know it. What you doing?
Shit. Well, you sound like you tired as hell anyway. Say your side.
I am, fool.
Shit, I mean, at the end of the day, what I can do, I'll let you know if something changed type shit, and we probably fuck around, do same time, but yeah.
That gas, some pressure. That shit, some heavy work right there, Six. That shit ain't no joke, smoking this shit.
But shit, bring that shit to the stew, nigga, so we all can fall asleep. You hear me?
Nah, that shit make me lazy, bro.
I ain't gonna lie, I'm about to cut back on smoke on the cool.
Cut back.
Yeah, I'm gonna go smoke on the weekend. That should be, I be smoking every day like I'm back at G5.
Right, not doing shit.
Yeah.
Lazy.
You heard me?
That shit make you lazy too.
Fucking right.
Fucking right. I know it.
Fucking right,
No,
man.
I'm finna
Soon as you hit that bitch, like, nigga, you could be up and good. As soon as you hit that bitch, nigga, your whole vibe change, nigga.
You know what I'm saying? I'm finna cut back on that smoking shit too. I'm finna stop.
No, for real. Stupid ass gonna be looking. Yeah. But I'm gonna let you know.
Let me know soon.
All right, bro. Well, yeah. I'm gonna say nothing too crazy, but nonetheless, let's get back to these charts. Monthly, I believe it's gonna close in a bearish engulfing. Like I said, we've been in a sell overall. I mean, if we look at the monthly, let's just be real. We've been in like sell shit since October 2011. If we really just want to be all the way real. After the market crash of 08, we had an uptick to over $1, and that was the last time we've been over $1 for the Australian dollar. Since then, heavy sales. And we've been having a lot of bearish engulfing starting from June 2021. As you can see, monthly engulfing bearish, 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 bearish. And guess what? About to be another one, bearish. So, don't try to fade what you think you see. Trade what you actually see. You're going to be way better off. Don't try to be the type of nigga like, oh, this is a low, this is a low, this is a low, this is a low. I'm about to buy this. Obviously, when everything been selling. Like, be the trader where once the market hits this price, you already in sales. So you just waiting to be, you got to react off of what the market is going to react off this low. If we get a strong rejection, wick rejection, okay, let me take out. Maybe it might be time to add in buys once I get back down to that low point from that wick rejection. Don't just hop into buys. Get the best price you could get. If you got a low, try your hardest to buy very close or very near to that low. Like I know it's hard to hold and wait because everybody probably thought this was a low. Locking in with this, thought this was low, thought this was low. Then the market tanked all the way down here to this low. Instant buy. Respecting that same low. Instant buy. Instant buy. Who knows where we going from here? But to play into these rejections, we still are coming from bearish price action. So the market is bearish on the monthly. Pretty much same thing on the weekly. We don't really see any type of bullish scenarios really playing out or structure really playing out till you get to the daily time frame. And the daily has more to show me as far as an engulfing to get me into the market, like you see here, like you see here at the lows, like you see here at the lows. So we need that scenario to play out. If we're not gonna get it, we know we need 2 or more bearish candles followed by a bullish engulfing. That's what we need. See, 4 hour, like I said, we already came in off of and I'm still in buys. I'm still in buys off this bullish engulfing. Also added testers from this bullish engulfing on Thursday on the 1 hour, Thursday in the morning. And that was a great buy too. I think G hit real big on that buy. But that was a nice sweet buy. Got in at 33. Market went all the way to 63. 63, 53. So you got a good 20, 30 pips. Real nice for the Australian dollar because it does pay very well out of all of pairs. Do your research and you'll see Australian dollar pays out the best. Don't give out as much pips. So that's why the key is not to chase equity. Chase percentages of money. What you want to chase is chase your equity. And not even a form of chasing it, but you want to focus on that. Get your equity big. Fuck making 100% every month. Fuck making 100 pips every month. Nigga, you want that equity to be at 100 million, 100,000. Because the more equity you have, especially with the Australian dollar, the more equity you have, the less is needed to, really lock in those profits. You got 100 grand. How hard is it for you to make $1,000 off 100 grand? Equitable size account versus a $6,000 account. You feel me? You're gonna need some heavy numbers on that $6,000 account in the form of percentages and in the form of pips. $100,000, you probably ain't gonna really even have to use all that equity. You got to use about 25K, and 25K will in 10 pips will give you 1,000. You hear me? So very easy for the Australian dollar to do. So let's take a quick look at the news. Let's see what we got. Monday, Austria manufacturing PMI for the euro. Nothing for the USD or for the Australian dollar. Tuesday, we have Jolt's job openers at 9 a.m. Australian dollars about to get hit over the head on Tuesday night. 8:30 retail sales. Trim mean CPI, monthly CPI indicator, inflation rate, RBA weighted median CPI year over year and quarter over quarter. Over 6 news releases, 9 in total for the Australian dollar, but over 6 just for Australia. Tuesday, so Tuesday about to turn up. Also, Euro is having an inflation rate coming out 7 o'clock in the morning, so we might see a little oomph from that. Linking the euro dollar to the dollar with the Australian dollar, we might see a slight little oomph with that. Interest rate for Bank of Japan coming out Tuesday late night at 11. Wednesday, we have ADP, Fed interest rate decision. Nice. We have 5.5. Will we stay? It's going to be crazy if we don't. The market will go crazy. Then after that, at 1:30, right after the interest rate decision, he got a Fed press conference. So, yeah, market about to go crazy. It's going to be a fire week, Tuesday, Wednesday. Continuing on Wednesday at 6 o'clock, Australian dollar, Judo Bank manufacturing and balance of trade at 8:30 for the Australian dollar on Wednesday night. Thursday, you already know, continuous jobless claims, initial jobless claims, nothing for the Australian dollar. On Thursday, a lot of unemployment news rate for the euro and GBP situations. Friday, NFP, that'll be the August 2nd. NFP, U6 unemployment rate, non-farm payroll, private and non-private. Yeah, amazing week. We got NFP on Friday, interest rate decision on Wednesday, no news on Monday. So what I would like to see the market do, knowing this now, if I'm looking at the full hour, meaning that Monday, Tuesday morning will be around here, I would like to see the market sell off and create a bullish scenario for the 1 hour to 4 hour and let that propel itself into a bullish engulfing for the daily. That's what I want to see. I really want to see this area get tapped into. Now, on the flip side, we could see a CPI, what was that? Unemployment and interest rate, Fed rate decision, sell the market off, maybe tap into this area, but also maybe mitigate this leg and further fill in the gap down here that was created right here. We might tap into that area. And then you can have a buy entry just sitting right below that, waiting for the market to expand higher. What's going to make it the market expand higher on Australian dollar? A tanking USD. So we look at the DXY. If I put up the daily on here, you see how the daily's been selling off on Australian dollar, right, since July 15th. Let's go to the DXY. Since July 15th right there. So the market should have been buying up. Same way the market was selling off. So this is key. We got to know when stuff is not lining up from a negatively correlated pair. That's key. That's convergence and divergence. So we see the market selling off on Australian dollar from July 15th, which is right around here, but the US dollar pretty much is in consolidation. It's kind of showing a little sign of bullishness, but overall consolidate. But the end and all the way until the point of the 29th, right here, yeah, 29th on Monday. So we go back to the Australian dollar. We don't see that lining up. You know, we should see, just like we see this sell-off to fade all this price action, we should see a push higher from this point to fade all this price action. But look at the structure that the DXY made while the Australian dollar was in so much consolidation since middle of May. DXY, what they look like at middle of May, right around here. Nice sell-off, nice bullish. So you see the structure. It's still in a consolidated state somewhat, but not as much, nowhere near as Australian dollar. We still have structure. We still have believability of what a price may go to. As far as any gaps for the market to sell off into, which would add to the buys side for the Australian dollar to buy into with all that clean traffic on the left. So if I'll go back to the Australian dollar, we got clean traffic to the left. We want the market to sell off and then turn up higher. We want the market to sell off lower down here and then go and turn up higher and go bullish. For the market to sell off, the DXY has to go bullish. Cool. For the market to go bullish, the DXY has to sell off. So we want a bullish DXY and then a bearish DXY. So we want a bullish DXY, maybe filling this to sell off on the Australian dollar. And then once we get that scenario, maybe tap into this first leg and so we would need the DXY to play into this bullishness, fill this gap, maybe tap into this gap potentially, taking out this leg of this bearish sell-off that we experienced during the end of June. And then the market will sell off, and the Australian dollar will in turn, or should in turn, go bullish, and we will see the clean traffic. All right. So with that being said, we are in for a nice week. Amazing news releases coming out that's going to push us into crazy new levels. So I'm looking forward to that. I can't wait. And yeah, man, it's going down, bro. So we about to really get it in this week for sure. And it's probably going to set us up, especially with that interest rate decision, probably going to set us up for what we're going to look like as we enter into the fourth quarter, which is going to be election quarter, November 5th. So with that being said, we're going to go and wrap it up. Like I said, we did have it a little earlier today. Usually we do it at 8, but we're going to wrap this one up. We haven't been active in the Telegram last week and kind of week before because the markets have kind of been not too giving. So it's been real good on the discipline side. No longer are we over trading, taking impulse trades. Like shit, last week I think I took one trade, that buy, as the market was buying up. So yeah, we definitely growing as far as on that level, as far as not looking at I have to trade, I have to, not looking like that. So yeah, things on the up and up, man. Road to 25K. Once we get there, it's over with. Now it's time to talk retirement. Of course, 25K ain't gonna retire you, but y'all only knew what we can do with 25K in these markets. It won't be long. It won't be long. So with that being said, we're gonna wrap this up, shut it down, say peace out to y'all, and we'll be back next Sunday. Hopefully we'll have more structure to play into. And yeah, we'll definitely be updated probably in the Telegram with some of the moves that's gonna come out, especially if they increase or decrease the interest rate. So we'll be back. Till then, peace out, everybody.